Good afternoon, traders. Here's your quick market snapshot focusing on inflation expectations, crude oil, and gold. So let's start with the US dollar. So all eyes are now on July CPI data, expected to show further signs of rising inflation driven by the tariffs. The core CPI is forecast to climb 0.3% month over month, which is the biggest gain in 6 months, pushing the annual rate to around 3%. While lower gasoline and food prices may soften the headline number, overall inflation pressures remain sticky. With the consumer fatigue setting in, it is still unclear how much of the tariff impact will be passed on to the end users. So the broader outlook suggests inflation will likely pick up modestly throughout the second half, with core readings hovering near 3% by year end, which is enough to keep the Fed cautious. And now to WTI crude oil. Despite President Trump announcing a new 25% tariff on India's Russian oil imports, the prices continue to slide. This mute reaction signals the market isn't convinced that the tariff will be enforced or that they will significantly alter the supply dynamics. Even if India is adjusting its sourcing, global supply is unlikely to tighten meaningfully, and Russia may simply redirect flows elsewhere. The drop suggests traders remain more focused on actual demand signals than geopolitical headlines for now. And turning to gold. While the metal has been range-bound lately, the current setup is worth watching. A triangle pattern has been forming, much like the one seen last year before gold's breakout to 3,900. With news flow lighter over the summer and trading volumes typically subdued, any breakout here could be sharp. If momentum builds, there's potential for gold to challenge 4,000 in the coming months. So to wrap up, inflation expectations are firming, and oil remains under pressure despite new tariffs, and gold might just be quietly setting the stage for another move. So stay tuned, volatility could pick up quickly from here.